Nebius released their latest quarterly figures before the market opens on Thursday. The quarter was quite good, actually more than good. The earnings call was also fine, but since the stock has gone up a lot in recent weeks, since that DeepSeek crash where the stock did crash 37% on one day, the stock almost doubled since then. We also had Nvidia's 13F come out and Nebius name was on that list, but let's be honest here, we already knew that. When I made my first Nebius video at the start of this year, I already covered that news because this was already known back in December of 2024. So what happened? Why is the stock down? What was mentioned during the earnings call? Did we finally get some more information about this whole business? Let's discuss all of that in this video. Of course, don't forget, in a couple of hours, we're going to go live, as always, with Jose, lunchtime hour, where we talk about the state of the market, some specific stocks as well. That live stream is already scheduled, so make sure you catch us live. If you enjoy all these types of videos, of course, hit all the buttons, subscribe, would really appreciate that. We're trying to push for that 100,000 subscribers, so help me out by pushing that red button. And if you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I'll start with this quick recap by this dude on X Couch Investor. So Nebius, of course, there is the Nebius core business, the cloud business, which is basically what you're buying. All the rest, all the side businesses, it's inside the company, but those, let's call them call options. So Toloka, AV-Rite, and Triple10, this is what you get on top of your investment. The core business is the one that generates the majority of the revenue today. So the core AI business revenue was up 602% year over year, driving the Nebius Group, the group's business, to $37.9 million. That's up 466% year over year. There's also a new US and Paris GPU clusters. AI cloud platform has been launched and they raised $700 million at the end of 2024 and they've got $2.45 billion in cash. Now, as for the sub-business, let's call them, Toloka, full year revenue was up 140% year over year, but of course that number is very, very small. They pivoted to Gen AI data at the top model producers in Q4. I'll touch on each segment in just a bit. As for AV-Rite, Grubhub robot rollout at OSU, Uber Eats pilots in Texas, Japan certification gained. And then with regards to Triple10, Q4 enrollments are up over 100% year over year. There are 4,000 new students and new financing with Ascent. ARR is set to hit $220 million by March 2025, and they're still on track to reach the $750 to $1 billion by the end of the year. They said that's well within reach. So all in all, you get this revenue being up 466% year over year. Now, it's true that total operating expenses is also up quite a lot, almost 90% year over year. Big increases in sales and G&A. They do talk a little bit about that during the earnings call. So yes, this company is still losing money, but growing extremely quickly. So moving to the sub-businesses. So Toloka, which is their AI development platform, as we said, full year 2024 revenue grew by 140% year over year. In 2024, Toloka shifted its model to focus on Gen AI training data, completing a transition to a new technology platform in December 2024. In Q4, they added several of the world's largest foundational models producers to its cloud portfolio, diversifying its base. They're focused on supporting advanced data for Gen AI offerings like red teaming for AI agents, evaluating of reasoning models, and scalable training by coding and math experts. As for the expert pool, they strengthened their pool of skilled domain experts, annotators, and writers, with a 50% increase quarter over quarter in domain experts in Q4, emphasizing cost-effective onboarding. As for AV-Rite, they finalized a partnership with Grubhub in Q4 to deploy nearly 100 delivery robots at Ohio State University by January 2025, enhancing campus delivery reliability. Piloted Uber Eats delivery with a new generation of robots in downtown Austin and Dallas under an existing Uber partnership. In December 2024, AV-Rite's delivery robots received a certification in Japan, opening opportunities in this market. They maintain a presence in South Korea, where it was the first to gain nationwide permission to test autonomous cars on public roads. And then they continued testing its new generation autonomous vehicles on public road in Q4, maintaining a 0 serious incident record per total mileage driven. And then the last one here is 1010. It's probably the most boring part here. That's the EdTech service. So revenue there was driven by a 100% increase in student enrollment, and the full year saw 14,000 new students enrolled, a 149% increase from 2023, boosting overall revenue. Now, switching to some comments that were mentioned during the earnings call. So they said the following: I'm very pleased with everything we are able to accomplish in Q4. Our sales function is now up and running, and we are seeing the results. More clients are coming onto the platform, and our more diversified customer base is already contributing to strong gross run rate revenue. Based on contracts already in place, which means that all the future contracts will just be put on top of the number that they provided right now, March annualized run rate revenue will be at least $220 million, and they have more potential contracts in the pipeline. Given this momentum, as well as the anticipated impact of additional data center capacity that we are building, as well as our next generation Blackwell GPU coming online later this year, our projected December 2025 annualized run rate revenue of $750 million to $1 billion is well within reach. With Nebius, it's really about the speed of, I wouldn't say innovation, but the speed of building a new data center, having those GPUs available, making sure that all of that is running quickly and smoothly. So if they can do this faster than the others, that's their advantage. They also announced that they're deploying new H200 clusters in Iceland, which they expect to be available for customers in March. And with the addition of Iceland and Kansas City, this takes their current capacity to around 30,000 GPUs, which are mostly H200, but they do still expect GB200, B200, and then also GB300 to be available towards the end of the year. They also said that they signed a significant new build-to-suit facility in the United States, specifically equipped for Blackwell deployments, and they will update on the details pretty soon. Their guidance calls for 100 megawatt in operations by the end of the year, and they're on track to deal with that. Then with regards to the $750 to $1 billion in ARR for the year, so that guidance, what gave them such confidence? Well, they said the following. First, we are significantly scaling up our data center capacity this year, and we will have more than enough to support this ARR number. Second, we have and have not yet deployed all of the H200 GPUs and have Blackwell reserved coming later this year. By the way, every time you see here black hole in the transcript is basically Blackwell, because the English on the call plus the audio was not that great. And then third, as they enter 2025 with great momentum, with existing capacity and based on contracts already in place, their March ARR will be at least $220 million, and they have more potential deals to come soon. So they feel very confident that they are well on track to hit that full year guidance. And actually, in reality, we believe that the scale opportunity could be even much, much bigger. Now, despite this quarter being good, there were some small misses here, so they explained the following. They did observe that the deals with customers, the lead times were taking longer than they observed in previous periods of 2024, as customers became much more selective and wanted to do more in-depth proof of concept. But they believe this was industry-wide. In addition, they had a couple of large customers that completed their engagement with Nebius in the fourth quarter. This was anticipated, but because of the longer lead times, they were not able to replace them before the end of the year. They were also launching a new AI cloud platform and put a lot of efforts to move all of the customer base to the new version of the platform, which took some resources to support that migration. Now that that's done, they're fully focused on scaling. And it's also worth to mention that during this period, they were very, very busy building out their sales and marketing team. They basically say that they had to do this from scratch. They're pleased with the effort, but many of these hires came late into the quarter, and they're now starting to see the early results in terms of new contracts finally. But they reiterate yet again, this was more a timing issue, and now they're back on track in 2025, which is also why they're quite confident with their guidance for that ARR number for the whole year. And so right now, if we look at the stock, it does seem like the stock rebounded just on top of that 20-day moving average earlier today. Of course, the 200-day one sits at $44.76. RSI, despite the nice rebound, RSI is still in a neutral place right here, but we are now back under the 200-day moving average. Let's see what happens with the other two ones, the 20 and the 50-day one. The 50-day one sits at $34.75. To me, again, this is a company that might not be flying under the radar anymore, thanks to Nvidia's 13F and more media attention. This is certainly one that is still growing extremely rapidly. Might not be the cheapest one out there, but like I kept on saying in the past videos, if their growth goals are achieved, it does look like it's not that expensive even at these prices. Of course, with them, like I said, it's all about speed, execution, scaling rapidly. If there are some delays in some random quarters out of their control, doesn't matter. Of course, that's going to impact, well, a quarterly report and maybe even an annual guidance. That's something you definitely need to keep in mind. So all in all, good quarter, stock will react, well, the way it wants to react, doesn't really matter. I am keeping this on the watch list. Of course, I could have bought it after the DeepSeek crash, but then again, during that day, a lot of things became much cheaper than 24 hours before that. So I'd rather accumulate what I already have, but this is definitely a very, very interesting company to keep an eye on. So that's about it for me. I'll see you all in the live stream pretty soon. Like, subscribe to all of that, and I'll see you all in the next one. Bye-bye.